everyone, welcome to Trading Hour on CNBC TV18. I'm Ekta Batra and with me is Prashant Nair, and what a day it has been. A lot of news flow when it comes to the entire NBFC sector. DHFL, which is topping the list in terms of the losses that we're seeing, down around 10 to 11%, and all of this on RBI Policy Day. If in case the RBI does cut rates by 25 basis points, then it will be the third consecutive rate cut that the RBI has undertaken. Currently, the yield is probably factoring in a positive outcome, sub 7% currently for the 10-year. Hi, Prashant.
Ekta, hi. Good morning. I mean, I think the rate cut is pretty much a given. I think given the fact of all that has happened, actually, I mean, the cumulative evidence strongly suggests towards at least a 25 basis point rate cut. But I think, what has happened, yesterday, in the last 48 odd hours or so with a DHFL, I think is top of minds for most in markets, most in financial markets at this point in time. What will this mean for other NBFCs? Post this event, will NBFCs again start to struggle to find liquidity from banks? Will the spreads NBFC spreads all start to blow out once again? And of course, will the RBI today start to address that in some way, in some credible, tangible way? I mean, I think these are the big questions that we will need to watch out from the RBI, even if they don't really do very much in terms of actual straightaway measures. Will their sort of what they say about this particular incident which has happened, the episode, their assessment of things, I think will be very, very important, because I think that rate cut, the repo rate cut of 25 odd basis points, maybe even more, some are saying 35, right?
35, yeah.
I mean, that is, I think, pretty much there, and maybe even in the price, unless of course it is more than 25 basis points, then it is a different story. But otherwise, I think this NBFC thing is really back on the radar, front and center.
Yes, absolutely. And I think what is probably going to take more importance in the RBI policy will actually be the press conference. Jahangir Aziz, we were speaking to him from JP Morgan, and he said, the MPC is limited only to rates. They will only act on rates. What we need to probably hear then is basically commentary from the RBI and from the governor with regards to everything that's happening in the NBFC space and as well as the liquidity scenario. But let's get talking about the technicals now. We have Rajat Bose joining in to discuss that. Rajat, hi, over to you. What are you recommending both in terms of the Nifty as well as in terms of stocks on what is actually quite a down day for many stocks?
Yeah, this down day is not very unexpected. I would say that after the closing of Tuesday, if you have seen the charts, then you would have realized that very few stocks showed some traction. On the other hand, lots of stocks were actually showing that they could display a lot of weakness. I mean, even big names like Page Industries, which is one of the calls that I would give on the sell side, stocks are actually looking pretty weak. Even the Bank Nifty, I suppose, unless it reconquers 31,500, there would not be any redeeming feature, at least during the day. And the 25 bips rate card is almost priced in. And as you said, the commentary is more important. If that leads to a recovery, then fine. Otherwise, once 11,920 is taken out, that is another 50 points from the current levels, then there could be a sharp fall. And I'm not expecting any significant recovery going forward, not just today, but over the next 1 week or so, because the chart setups are suggesting that there would be more selling going forward.
Okay. Rajat, individual trades?
Individual trades, Apollo Hospital, this stock is actually showing a lot of momentum and it can still move up further. So I've kept a target of 1386 to begin with. If that is taken out, then 1399 would be the next level, and the stop loss should be 1350. It's a buy call in the cash segment. And Page Industries June futures, I would put a stop loss above 20,250. Targets would be 19,800 and 19,600. Carry this trade to the next session if needed, and the stop loss should be used on a closing price basis.
Okay, all right, Rajat, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies. Well, it is all about DHFL in terms of a stock this morning. It's taken a knock. It's down around 12% in the past 48 hours. Rating agencies have downgraded the commercial paper rating to default grade. We understand the company is now taking various steps to bridge the liquidity gap for meeting its obligations to avert a possible default. Nisha Podar is here with all of the details. Nisha.
Thanks for that. Of course, Ekta, that last time DHFL had delayed the payment of interest on NCDs and is looking at solving that in the cure period of 7 days. And that has really shaken the confidence of some of the rating agencies on their ability to really repay on the commercial paper maturity, which is going to hit the company in the coming few days in the month of June. What I've gathered from sources with direct knowledge is that the shortfall between the inflow of amount for DHFL in this month and outflow is about 1,500 odd crore rupees. And this, remember, accounts for the inflows of the Blackstone money on the basis of Aadhaar transaction. So net 1,500 crore rupees is the kind of shortfall that DHFL is looking at addressing right now. We do gather from sources that DHFL management is sitting in crucial meetings with the lenders led by SBI to figure out solutions. They are looking at bridge this gap in their asset liability. Now, what we also gather is that Avansay Financial and that they have given a stock exchange notification. RBI approval has come in for that. 800 crore rupees will be pumped in by way of that as well. As far as this month is concerned, the next of June, in fact, DHFL did comment to cnbc TV 18 on the queries raised, and they said that these ratings agencies' activity and the downgrade is unwarranted at this point because the company hasn't really defaulted. But then actions will speak louder than the words. The investors are really not seeing much faith in this particular company at this point as far as stock market is concerned.
Yes, absolutely, Nisha. Thanks very much for that. So that's on DHFL, but we do have the Commerce Minister Piyush Goyal who is addressing a crowd. So let's in fact just cut across.
Targets. अब समय आ गया है कि छोटे मोटे दृष्टिकोण से हम इस विभाग को ना देखें, एक बड़ी छलांग की तरफ संयुक्त रूप से, चाहे वो राज्य सरकारें हो, चाहे वो ट्रेड और बिजनेस हो, चाहे केंद्र सरकार हो, सब एक संयुक्त रूप से मिलके एक साथ देखें क्या क्या करने से भारत का अंतर्राष्ट्रीय प्रभाव बढ़ सकता है। एक प्रकार से आज जो साख माननीय प्रधानमंत्री नरेंद्र मोदी जी ने देश की अंतर्राष्ट्रीय पटल पर बनाई है, we sit on the international high table today. I think we need to see that reflection also in our trade and industry, both domestically and internationally. This department just does not focus on exports and imports. It is also concerned about internal trade. It is now also mandated to do an effort to improve the logistics framework, infrastructure, costs. It is now also required to monitor progress of projects. The project management monitoring role has also been moved into this department. And in some sense, the Honorable Prime Minister's vision is that we all work as a team and move out of the traditional mindset of me, my department, my state, and look at India as one. ये भारत महान है, ये भारत के बारे में जब तक हम सब नहीं चिंता करेंगे, सोचेंगे, तब तक मैं समझता हूं कि जिस प्रकार का संभावना हमारे देश की रही है, अभी हरदीप जी ने सही फरमाया, हम कहां थे और कहां पे जाके पहुंच गए.
Okay, Mr. Piyush Goyal's first address to the media as the Commerce Minister. Okay, 60 points lower on the Nifty. We're at about, what, 11,962 as things stand. So there isn't very much by way of movement. There is still, what, about 45 or 50 odd minutes to go for the, I mean, actually less than that to go. At 11:45 we will get the RBI decision, so not that much time, and we'll start talking about the expectations from the RBI and what to watch out for in just a bit. But we're still talking about stocks, so let's spend a minute talking about Gas Authority of India. The regulator, PNGRB, has increased tariffs for the HVJ pipeline, that is the Hazira Jagdishpur upgradation pipeline. Sonal Bhutra is here. There were lots of expectations that the tariff hike could be large, but well, it's not the case. The stock is reacting. Sonal.
Absolutely, Prashant. As you rightly pointed out, the tariffs have been hiked, but they are not as much as the street was anticipating. In fact, GAIL had applied for a tariff revision of more than 100%, and the analysts were expecting a hike of around 15 to 40%. But the tariff hikes have been only around 3%, and that is what is a dampener for the stock as of now. And why are these two particular pipelines important is because they account for around 60 to 65% of the total gas transmission volumes for the company, and that's why CLSA has actually downgraded the stock to an underperform versus a buy earlier. They've cut the target price, and they've also cut the EPS estimates by around 4 to 8%. That is because they were factoring in a hike of around 15%. And if those 100% hikes would have come in, that would have increased EPS by around 81%. And this not coming in is definitely something that is why we are seeing huge declines on the stock as of now. And overall, they also say that right now there are a lot of headwinds in terms of low crude prices and lower LNG prices that also could put some pressure on the stock.
Okay, all right, Sonal, thanks very much for that. But let's now address the entire commodity and currency space. We have Manisha Gupta joining in, and she's going to be talking about the trade data. Manisha.
Thank you so much for that, Ekta. Well, yes, it's the containerized data that comes out every quarter, and India's numbers do show a gain when it comes to the exports. It's up by nearly 6% for the first quarter of 2019. It's the import numbers which actually have shown a decline by 2.2%. So when you talk about the imports, it really has been about pharma, metals, kitchen appliances, chemicals, fruits and nuts. Exports really has been about rubber, tile, stone, textiles, seed, beans, cereals, etc. is what really is the highlight of the export and import numbers as far as the Indian containerized data shows. Let's talk to Steve Fielder, who is the MD South Asia Maersk. They are the ones who come out with this data. Steve, hi, good to have you. While, of course, we have seen the exports continue to gain up, 6% up in the previous quarter as well. It is the imports which actually have shown a decline. How are you breaking up the numbers in sense of commodities there? And what is your sense in sense of trading partners as well with India for this quarter?
In general, the export market grew 6%, as you mentioned, which is fairly stable. It has grown faster in the past, but in general, it's a fairly solid growth. And we see certain trends which are fairly interesting. So we see a strong growth in the engineering segment. We see in the refrigerated cargo sector, fruits and vegetables, pharmaceutical and seafood, to name a few. And we see some interesting markets developing. So, for example, Poland was a key destination for Indian exports as a high growth market during this first quarter versus the previous period last year. For the imports, it was a slightly different picture. We saw, as you mentioned, a 2% decline year on year. There was some buoyancy among certain commodities such as pharmaceutical, kitchenware, appliances, chemicals. But what we did see was a sharp decline in the imports of paperboard, of waste paper and of solid plastic.
Steve, coming on the global trade disputes as well, there are markets which are reeling under that impact. With this data that has come out for the first quarter of 2019, do you see the global trade disputes, the recession fears, the slowing demand concerns, the tariffs, etc., all of that impacting India's trade as well?
If you look at the recent tariff hikes in the US in terms of imports of some of the Chinese goods, we haven't yet seen a significant impact on our trade volumes. However, we did see on the Trans-Pacific trade, which is between Asia and the US, we have seen a reversal during this quarter. And that is largely because of restocking or let's say inventory buildup in the fourth quarter of last year, which led to a softer demand in quarter one. But if these tariff hikes do continue, then it has the potential to impact global trade volumes, we estimate, by around 1%. Now, if you take it in a local context, and obviously it's important to look at both because we are a global company and trade is global in nature. However, in an Indian context and a South Asian context, we have seen quite a bit of interest in the market for companies wanting to increase their sourcing in India, in Bangladesh and in Sri Lanka. So it could be that these countries could be beneficiaries of this development.
Steve, also comment on the agri-exports, because much of the chunk that India exports does feature in sense of agri-exports, and with the draft export policy out, especially for the organic and processed foods, what is your sense? Is there a pattern already forming? And with these kind of policy changes that the new government is pushing out, do you see that that taking place? Are we ready in preparing ourselves for the second quarter?
Well, India is still predominantly an agricultural economy, and of course produces food and foodstuffs in abundance and agricultural in the form of agricultural commodities. So I think that the potential is tremendous. On the organic side, we have seen a significant increase in organic exports, particularly to the US, although the market remains fairly small in size. And we do expect that to continue to build momentum. In general, agricultural exports in the non-organic segment, we still see fairly strong developments. And I think we certainly are working with various stakeholders on projects to, for example, facilitate the export of bananas en masse, of which India is one of the world's largest producers. So overall, we're fairly confident as new technologies are adopted, as the export policy framework comes into play, and of course backed up by the various bilateral agreements that have been signed with various countries over the past decade, this definitely bodes well as a growth sector.
Steve, with the kind of global scenario that we are working in right now, the trade partnership with Iran is almost breaking down, and so is the case with many of the Gulf producers. How has been your sense with India signing so many bilateral trade treaties, etc.? Is India really looking for more trade partners outside? How has that changed?
I think if one looks at the numbers and also looks at the compound annual growth rate of around 8% in exports over the past 5 years, it's clear that India has communicated that it's open for business, and with the level of and frequency of bilateral agreements being signed all the time, I think that India has definitely diversified its trading base, even to augment the traditional trading partners. So we've seen, for example, a lot of trade building with Saudi Arabia. We've seen a lot of trade building up with the UAE. We've seen trade building up with Israel. We've seen trade building up with Canada. And, so these all, again, bode well for the future of exports, because India, is well known as a reliable trading partner.
Steve, final question, and since we're all talking about budget right now, what is the budget wish list that the trade as a community or as a containerized community really wishes to see in sense of policy change?
I think, two things would be most important. One would be the infrastructure on the inland logistics, and the second would be faster adoption of technology.
All right, Steve, we'll let you go at that. So that clearly is the view coming in from Maersk, that the exports have continued to gain in the last 5 years, actually, but it is the imports which really seem to be bothering right now. And as Ekta, he was pointing out that even as the global trade tariff dispute continues for a longer time, it will have an impact of only 1% in the global trade scenario. So not too much of a concern, really, according to him right now.
Okay, all right, Manisha. Thanks very much.